Alright everyone, Cowboy Trades here, welcome back to the channel for another update on Kadena. So Kadena is currently confirming the breakdown of the asymmetrical triangle, which we mentioned in our previous video, and we're heading right down to the price target we talked about at 56 cents. However, I do have a further update for you today. When I was looking at the charts, I've noticed two different fractals which are currently developing in Kadena. One of these fractals has yielded a 50% drop to the downside, and the other fractal has yielded a 83% drop to the downside. Now, don't worry, I don't think we're going to drop 83%. However, I did want to discuss these fractals with you. I want to point out the similarities, and I want to let you know what are my thoughts on Kadena right now and my price target in the immediate short term. So let's dive right into the video. If we zoom into the price action, you can see from the most recent swing high all the way up at 82 cents before we had that capitulation into new bear market lows. We discussed this in the previous video. We reverted right into the golden ratio. We had wicks all the way up at the 61.8 fib, and we had candle body closes right on the 0.5 Fibonacci. And in our last video, we were letting you know that this rejection was about to solidify. And as you can see, we are tearing through the fib levels right now. Pretty much, if we now draw our Fibonacci from the low to the high, you can see that we are coming right down to the 618 fib at 58 cents. So if 58 cents doesn't hold, and I personally don't think it will, then we're pretty much primed to break down and make new bear market lows, at which point we'll be taking out the 236 fib as well. So just a quick update, obviously we are setting up this brutal rejection right now over on Kadena. It looks to me like we're heading back down to the bear market lows, and remember, as we discussed in our previous video, the reason why we held this bear market low at 50 cents is because there's a huge cluster of volume down here at 50 cents. Now ignore this pump that's happened on Bittrex. The Bittrex chart is very jumpy. I think there's a lack of liquidity on here, which is why you see these obscene wicks which do not happen on other exchanges. There's never any liquidity associated with them, so it doesn't affect the volume profiles. But nonetheless, I do want to highlight on the volume profiles, if we do drop beneath 50 cents, there's really not much support and resistance built out until we come down to these lows. As you can see, there's lows formed down here, there's lows formed down here. Apart from this, you know, there's straight wicks up, straight wicks down, straight wicks down, straight wicks up. There's not really any volume support. There's not really any levels, should I say, built out between the range of 50 cents down to 32 cents. So to keep things nice, short and sweet, if we break beneath 50 cents and make new bear market lows, you already know this if you're a veteran. I do think we're coming down to between 33 to 28 cents, in which I do have a plethora of buy orders located down at these levels. We also talked about the bearish divergence which was forming on the daily time frame. We talked about this in the past week or so. This was one of the main reasons why we were saying that we don't think we're going to have a significant move to the upside, and we're probably going to come down to what we referred to as scenario B, where we come all the way down to 30 cents and start DCAing. Now, the only update I want to provide you on this is, you know, yes, the hidden bearish divergence is still playing out. The price action, it was making highs, lower highs, lower highs, lower highs, lower highs, lower highs, lower highs. You get my gist. And the oscillator is making highs, higher highs, higher highs, and higher highs. Now, in regards to the last video, we haven't actually made a higher high in the oscillator, but what I do want to highlight is today we are of course getting a significant push to the downside. We're down about 4% for Kadena across exchanges, but what I do want to highlight is even though the price action is going down today, the MFI is actually continuing to push up. So if we kind of break down and make a lower high in the next few days or so, and we see the oscillator push up to, you know, something like 80, hitting this trend line before coming down, this hidden bearish divergence is going to get stronger and stronger. I just want to let you know it doesn't look like, even though we're breaking down from this hidden bearish divergence, it doesn't look like the bearish divergence is over, and it looks like it's getting stronger and stronger to me, which is definitely a worrying sign if you are a bull. So before we talk about these fractals, I just want to get all the other charts out of the way. My price targets in the immediate short term are still down here at 56 cents. However, if we do draw our Fibonacci from the swing low to the swing high, we obviously do have the 618 fib in the immediate short term. That is 57.5 cents. Then we've got the 56 cent price target of the asymmetrical triangle. We do technically have the 786 Fibonacci down at 54 cents, but I personally really am not going to be looking at this level. I kind of think that we are in that stage right now where we're curling back down to the downside, getting ready for that new bear market low. And of course, on the 4-hour time frame as well, you can very clearly see we had a parabolic run up, spiky top, and now it looks like we're coming all the way back down to the base of this. This is a bar pattern with a price target at 52 cents, and in the macro, my thoughts still have not changed. I still proceed to believe we're going to break down to the next volume profile support between 33 to 28 cents, in which I will be buying Kadena for the first time. KDA BTC has also seen a nasty drop down today, about 2.6%, and we are on the second lowest candle wick to the downside since the bear market lows. It really looks like we're about to come down and make new bear market lows for Kadena against Bitcoin. This is one of the reasons why I don't believe the pain is over for altcoins. I'm really seeing altcoins get absolutely decimated against their Bitcoin pairs. If you come over to the Bitcoin dominance, you can see Bitcoin dominance is exploding. If you come over to the total altcoin market, it's underneath some critical levels of resistance, such as the bull market support bands, weekly EMA ribbons, 200-week moving average, and in my opinion, I think we're only just seeing the start of a massive rejection from these very important moving averages. So be very careful. If you are in altcoins right now, I think things are about to get worse. Now, those are the chart updates that I wanted to provide you. Let's now talk about the two different fractals. Let's start off on the fractal that's happening on the weekly time frame. This was an 83% drop. Now, once again, am I saying Kadena is going to drop 83%? I don't think Kadena is going to drop 83%. I just want to put that out there. If we look at, the most recent local top and we draw down an 83% correction, that would imply Kadena would come down to 10 cent. And in the immediate short term, this isn't my prediction. My price targets aren't down at 10 cent. My price targets are at a 53% drop, round about 30 cent or so. So this will come into confluence with the fractal, which we'll talk about in just one moment. Now let's readjust this chart. We're no longer looking at when the stochastic RSI breaks beneath 20. We're actually looking at what has previously happened when the stochastic RSI has come down, hit 0, and then started to exceed the 10 mark and have a rally to the upside. Now, in some instances, you can see, for example, over here, this presented a 75% rally to the upside over here. Over here, we saw about a 79% rally to the upside. In the most recent pump, we actually saw about a 46% rally, and it seems like it's getting stomped out at this moment in time. However, what I want to point your eyes to is this chart over here. This commenced on round about the 14th of March 2022, when the stochastic RSI started to exceed 10. Now, what you'll notice is we had very similarly after this, pump from the stochastic RSI flip from 10 all the way up to 28. This was about a 32% rally. But then something changed which didn't happen in these two other instances on the stochastic RSI. In these two previous instances that we just looked at, you can see the stochastic RSI continued to climb and the price continued to climb. The stochastic RSI continued to climb and the price continued to climb. However, what I want to point your eyes to is this fractal over here. Now, what you'll notice is for 2 weeks we had a nice rally to the upside, and then on the third week, despite the fact that the price was melting to the downside, as you can see from the top up here, we broke down about 25%, but the stochastic RSI continued to push up to round about 27 before it started to turn back down to the downside for the next week. So we saw a divergence, and we obviously just talked about a divergence which was playing in the lower time frames. We're seeing a daily divergence, which could be a signal that on the weekly time frame, if we keep on seeing this divergence play out on the daily, this could bleed into a weekly divergence on the stochastic RSI. So what I'm really highlighting here is right now we're seeing a daily divergence. We are seeing a break to the downside after a rally for about a week or so, and you are seeing the stochastic RSI approach the exact same level as it did in this fractal. So I just want to highlight the possibility that the stochastic RSI could continue to push up this week, and then in the next week we could start to flip back down to the downside once again, and we could see the price on the weekly time frame start to capitulate back down to the downside. I really do think momentum is starting to become lackluster for KDA. Buyers are definitely getting exhausted right now. How do I know this? Well, this is exactly what hidden bearish divergence tells you. When the price is making lower highs, lower highs, lower highs, lower highs, but the oscillator's making higher highs, this shows you the oscillator is becoming more extended, the markets are becoming more overextended, and every single time we have one of these lower highs, the bulls are just getting more and more exhausted trying to hold the price to the upside. And when the MFI finally decides to break to the downside with the price will likely catapult back down to the downside. So this is the fractal I wanted to share with you on the weekly time frame. Like I said, am I predicting a 83% drop to the downside right now? No, I'm not predicting an 83% drop to the downside. However, the fractal can still stand and we can have a significant drop to the downside even if it's not 83%. Now, what's the second fractal that I wanted to talk about? Also, I'm not sure if I mentioned mentioned this earlier on in the video, so I'll just quickly mention it again now. If we do look at the daily time frame, you can see, since our previous update, we were just holding support on the daily EMA ribbons, and today we've got a nasty bearish engulfing candle underneath the EMA ribbons. Now, let's come over to this chart over here, and I want to talk about this double fractal which is playing out. The last time this happened, Kadena saw a 50 to 51% drop in the market, and here is exactly what happened. This is actually a fractal which is played out on 2 time frames. So let's start off with the daily. If we are looking at the daily time frame, what I'm really focusing on is very plain and simply, you saw the stochastic RSI come up and hit 100 over here, and you saw the stochastic RSI come up and hit 98 over here. So very similar overextension. Of course, we did have a top in the stochastic RSI here, here, and here, and we did have 3 tops before rolling back down to the downside, but we weren't as overextended as we were approaching this 100 line in the previous fractal. So I just want to highlight, the last time the stochastic RSI was this overextended, yes, if we are looking at when the breakdown happened, we saw about a 50% drop in the market, 54% to be precise. However, why did I say 50%? Well, that's because on a different time frame, if you're looking at a specific flip which happened on the 4-hour, there was a 50% drop which happened in this exact same time frame. So bear in mind, we're on the daily now. You can keep your eyes focused on the fact that there's a blue rectangular box in this region. We're now going to come over to the 4-hour time frame. Once again, remembering this is the daily time frame that we were just looking at a second ago. We're now just looking at the 4-hour, and what is happening right now for the price action on KDA. Let's get rid of the stochastic RSI. We don't need to talk about that anymore. As you can see, we've clearly been in a bearish trend on the 4-hour EMA ribbons, and we've quite recently just absolutely catapulted, specifically in the past 12 hours, we've catapulted to the downside of the 4-hour EMA ribbons, and look how tight they're getting. Now, if we just extrapolate this, remember, this is just a rough estimate on when these could potentially have a bearish flip, but these could potentially break bearish in the next 24 hours. In fact, it's less than 24 hours, but to be conservative, let's say this break could be happening in 24 hours. Let's say, just like in the previous fractal, which we'll look at in a second, we could potentially have a dead cat bounce up to as high as 62 cents before breaking back down to the downside. Now, if we come over once again to this blue box, which we were looking at a different fractal on the daily time frame, as you can see, we had a very similar situation over here where we were in a nasty downtrend. We flipped between long and short a few different times, but what happened once we finally decided the direction of the trend? We fired a short all the way up here at $1.03, and as soon as we fired short, we bounced back up and confirmed the 4-hour EMA ribbons as resistance, which is why I'm letting you know, even though this is bearish, a bearish flip is of course bearish, a lot of the time when you do have these bearish flips, you do end up having a slight pump back up to the upside to reconfirm them as resistance. So, don't be surprised if we have maybe a 3 or 4% increase, today or tomorrow. Really don't be caught with your pants down entering 100x leverage. I'm not recommending trading at this region. Once again, if you are a veteran, you'll know we just closed out a 3x return. We were shorting this market from all the way up at $1.12. I'm just letting you know what my thoughts are. This is not a position of strength to be trading from, in my opinion. I'm just letting you know what I really think is developing right now. And the last time this happened, you can see, if we take the retest of the 4-hour EMA ribbons and draw it down to the bear market lows, or at least the current bear market lows at 50 cents, you can see, what do you know, that was a 50% drop in the market. So, depending on whether you're looking at the daily time frame where we had a 54% drop, whether you're looking at the 4-hour time frame where we had this EMA ribbon flip and we had a 50% drop, this double fractal on 2 different time frames is definitely something that I've got my eyes on, and this is kind of what I think is going to be playing out. Once again, on the 4-hour, I think in the next 24 hours we're going to bounce back up to resistance. I think the 4-hour EMA ribbons are going to flip bearish. I think the price is going to flip back down to the downside, and at which point I think we're heading down to the main price target, which I mentioned at 56 cents. That is the price target of the asymmetrical triangle, at which point I do believe it's going to be a pretty linear downtrend. If we are looking at the stochastic RSI right now, you can kind of see the last time this other fractal tipped over that, we did start experiencing bearish engulfing candles right off the back, and I think that could take us down into new bear market lows. It might take a few weeks to come down to this price target. I'm not saying it's going to happen at the end of this week. I'm not saying it's going to happen in 48 hours. I am saying, however, that I do believe we're getting ready for that next ebb and flow. We're about to bleed out to between 33 to 28 cents, in which I do have my buy orders placed. If you're new to the channel as well, I do also have a buy order down here at 22 cent and 20 cent, approximately where this POC point of control is. You know, does that mean that we have to come down to 22 cent? No, it just means that if we do, I want to be a buyer down at these regions. So my main price target in the macro is still 30 cent. Just wanted to give you a quick update. So for today, my friends, that's all I've got. You know my thoughts on Kadena. If you do enjoy my content, make sure to let me know down below by leaving a like and a comment, share the videos with your friends. If you want to further support the channel, feel free to click the join button on YouTube and become a member today. Follow me over on Twitter at 618_cowboy. Spinny Boy Cowboy Trades. I'm out. Peace.